Good morning, good afternoon, good evening. This is a new episode of Per Trade Finder Pro, where we are going to analyze the Per CRM and Nuance, which are the tickets that belongs to companies Salesforce.com and Nuance. This is what we call the November trade of the month, and it is a signal that Per Trade Finder Pro suggested on the 24th of September, instructing us to sell short CRM at 285 and buy long Nuan at $55. So when we have the signal triggered by our software, shouldn't take it in a raw format. We should analyze with care whether we should take this trade or not. And this is what we are going to do in this video. We are also going to show you how to risk manage your position once you get into the trade, because that is something we understand it is crucial in order to sustain a stable and healthy trading. So with that, let's to Pair Trade Finder Pro, and let me show you the history of this pair. This is CRM and Nuan. The signal was triggered on the 24th of September. If you take a look here, we are coming from a price of 259, and in just a couple of days, which is probably a weekend, to a 285. So something happened here that triggered the signal. Nuan itself was pretty stable. So these are the graphic that we are going to see in a few minutes, because there is very important information behind here. We should analyze with care, because that is going to help us to take the final decision. If you go to the CRM price chart 24, there was a pike here that was provoking the signal, and then you have revert back to the media, which is our signal itself. Now, let me go back here, because what do we do always when we are analyzing a pair? We always check news. And if you go to Nuance website, what you observe is that at the time of the signal, so around the 24th, we observed that Nuance was ranked number one solutions provider by Black Book Research. Well, this is a news that you can expect from a leader like Nuance in its sector, and we don't think this is what really provoked the signal. But if you go to Salesforce, Salesforce website, you see that on the 22nd of September, they signed a contract, expanded partnership with AWS, which is Amazon Web Services, and Slack. So having these big three companies, leaders in their competence, joining efforts in this partnership, yeah, that is something that could provoke the signal. Next thing that we do is we go for the fundamental snapshot, and we open up this window where you see that both companies belongs to the same sector, the technology sector, and both of them they are in the software application subsector. So technology sector and same subsector is what we want to see. Being in the same sector is mandatory. Being in the same subsector is convenient, but I wouldn't say mandatory. Market cap of CRM is 254, and Nuan is 17 billions. So there is a good difference here, but being such a big company, 17 billions, that shouldn't stop us from taking the trade. Now, price to sell is pretty similar. Price to book is, well, still in range, and beta is very similar. At the day of the signal, there was no earning release in front of us. and there was no either dividends that could affect the trade. So based on this fundamentals snapshot, we should have taken the trade. So now, once we have analyzed the fundamental snapshot, we go to the graphics themselves and we continue our analysis. What we see here is that even if the ratio was trending for the first part of the year, in the second part, what we observe is a pretty flat ratio, and that's what we want to see because we don't want trending ratios by any means. We want these situations like here. Correlation was pretty good, around 80%. That is important because always remember that correlation is going to help you not hitting big losses, and co-integration is going to give you the money. So these two parameters, correlation and co-integration, are crucial for us. And there is another very important thing that happened here is when you take a look to the RSI, you see an RSI that is decreasing while the ratio is increasing. So you have a signal increasing and the RSI decreasing, you have what we call a divergence. And a divergence is something what we are convinced that increase substantially the probabilities of having a very profitable trade. So with all of that, we would have taken this trade for sure. But let's continue analyzing more parameters. Next one is volatility. Volatility in the first part of the year was also pretty big, 3.8, 3.9. That is too much. We wouldn't have taken probably the trade if the volatility when the signal was triggered was at these levels. But if you see here that it was decreasing, it came to a point where the signal was triggered with a volatility of 1.8, around slightly more than 1.8. So that is acceptable volatility, and based on that, we would have also taken the trade. Now, with all those data, the decision is made. We will go for it and enter here, CRM 285, NUAN 55. The trade begins to evolve, and what you see is that it makes a profit pretty fast. So at the 4th of October, you have almost 400 bucks already in your profit account. So this is something that we need to consider because the way we want to risk management this situation is when you get a standard deviation entry of 3.39, we apply what we call the 1.7 rule. So it's basically subtracting from 3.39 1.7. That gives you 1.69. And 1.69 is our target. The target, instead of being all the way to 1 standard deviation, we say that if the standard deviation hits less than 1.69, we're going to exit. And this happened here with a profit of $500, as I already mentioned. Now, if you don't want to do that for whatever reason, and you want to let the trade evolve, what we advise strongly is at least reduce your size by half. So either on the 4th of October or even earlier, seeing this big profit here is reduce immediately your size, take some money, and sleep better. Because the signal was evolving and it was going against us pretty fast. So 8th of November, we see that there was a loss of $900. This is very difficult to sustain. So going through all this pain for 1 month and a half is very tough. And what is even worse is the fact that You would have exit the trade with $500 in your favor, and then you end up with a loss of $400. So that is 900 difference in your profit and loss account. It's too much. It's very difficult to be able to not go through tough times with this trade. So once again, apply the 1.7 rule, or at least reduce your size. That is the conclusion. Thanks so much for your attention, and see you in the next episode.